Hey Amazon sellers, Steve here, the Seller CPA. Today I'm going to talk about selling as a non-U.S. resident through Amazon FBA. Now, I get a ton of questions about this through various different sources. I get emails to my website. I get prospective clients making appointments, trying to find out about what they can do to comply with U.S. tax if they are selling as a non-resident through Amazon FBA. And I want to make it very clear that practitioners, professionals have varying different opinions on this. So if you speak to one lawyer or one CPA, their opinion might be different from another, because what we're doing is interpreting what we see as the IRS guidance and how it applies to a particular situation. So this video is going to cover my personal opinion on how I'm interpreting the IRS guidance on this topic. So let's dive right into it. All right, now before we even get into what forms need to be filed, when they need to be filed, anything like that, let's take a step back and just look at the definition so we understand what the terms are that we're working with here that are being thrown around by various different people online, passed from one seller to the next, and really a lot of bad information is floating around online. So I want to clear everything up. So let's look at the terms. The first one I want to look at is trade or business. Are you engaged in a trade or business? This is really the first thing that you have to determine, because if you're not engaged in a trade or business, then none of this is relevant to you. So the best place I think to look at this information is on the IRS website, because what matters is their definition of these terms, nobody else's. So on the IRS website, they have a business definition or definition of trade or business. And a trade or business generally includes any activity carried on for the production of income from selling goods or performing services. So anybody who's selling on Amazon FBA is selling goods, and they're going to be carrying that activity on for the production of income. You're not just doing it for fun, and you're not doing it to lose money. And you can find that website, irs.gov, and there's actually a link to this citation, this definition, on my blog, which I've included on the link to this video in the description. So I think it's pretty clear that if you're selling goods for the production of income, you are engaged in a business. So then the next thing we need to cover is, are you engaged in a trade or business within the United States? So this is something that there's a lot of disagreement on, and of course, it's important to understand if you're engaged in a trade or business in the U.S. So we've established that you're engaged in a business, but are you engaged in a business in the U.S. if you have no physical presence here whatsoever and you're just shipping products through to FBA and selling to U.S. customers? And so a lot of the confusion comes in when you see the terms USTB, U.S. trade or business, or ETBUS, ETBUS. These terms are short for United States trade or business, or engaged in a United States trade or business. And there are a lot of articles online that state if you do not have a dependent agent operating your business for you in the U.S., then you do not have ETBUS or ETBUS. Further, they'll say that FBA is also not a dependent agent, and therefore you do not have ETBUS and you're not subject to U.S. tax. But is this really true? Let's examine the facts, and I want to dive in and switch over to actually looking at some of the material here. In my research, I came across this IRS training material, LB&I International Practice Service Concept Unit. So this concept unit is one that distills information, that's training information for IRS staff so that they can understand these concepts. Now, they have a little disclaimer here that says this is a not official pronouncement of law, blah, 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 blah. But it's useful to understand how they're thinking, and really how the IRS is thinking is how you need to be thinking in terms of understanding what your exposure here is as an international seller through FBA. This slide is a particularly important detailed explanation of the concept, identification of a U.S. trade or business of a non-resident alien. It says here the term trade or business within the U.S. is not fully defined in the code or Treasury regulations, and the IRS will not provide an advance ruling on whether a taxpayer is engaged in a U.S. trade or business. So they're not going to tell you if you call them, I'm an Amazon seller selling through FBA and I don't live in the U.S., they're not going to tell you that that means you're engaged in a business within the United States. They're not going to tell you that. It says here, generally, whether or not a person is engaged in a U.S. trade or business shall be determined on the basis of the facts and circumstances of each case. An NRA, non-resident alien, can have a U.S. trade or business through a dependent agent. So it says it can have a business through a dependent agent. It doesn't say anywhere that if you don't have a dependent agent that you are not engaged in a trade or business. It doesn't say that. It says to be engaged in a trade or business, a taxpayer either directly or through a dependent agent must be involved in an activity that is considerable, continuous, and regular, and must be engaged for income or profit. So if you're a serious seller and you're trying to make money, you're sending Amazon inventory and you're trying to sell and continuing to replenish that inventory, it's going to be considerable, continuous, and regular, and you're engaged for it in a profit, obviously. And so it says either directly or through a dependent agent, but it doesn't say anything about an independent agent, which would be Amazon FBA, excluding you from being involved in a trade or business. It's determined based on the basis of the facts and circumstances of each case. And I think it would be pretty hard to justify that you're not engaged in a U.S. trade or business if you have a U.S. entity and you're selling into the U.S. market through Amazon FBA, especially if you're buying and sourcing your product in the U.S. But we'll talk further about that. Just wanted to cover this topic. Okay, so continuing along, we've established that you are operating a business and you most likely are operating a business in the United States based on the facts and circumstances. So the next concept I want to talk about, the next definition, is effectively connected income. So what is effectively connected income? Effectively connected income, which is defined by the IRS, and again, the links directly to these IRS definitions are on my blog. So if you go to sellercpa.com, I'll put the link in the description, but if you go to my blog, you'll see Selling with FBA, Amazon FBA for Non-U.S. residents, the definitive guide, and it's all detailed in there. So effectively connected income is income that is effectively connected to the United States. Some misinformation online says that if you source products from outside the U.S., then you don't have to pay because your products were not even sourced in the U.S. This is false, because if you look further at the IRS guidance, it says, for example, and I actually think this is new. I've been looking at this website for quite a while, and I recently saw that this was added. For example, profit from the sale in the United States of inventory property purchased either in this country or in a foreign country is effectively connected trade or business income. And effectively connected income in general is generally when a foreign person engages in a trade or business. We've determined that you're engaged in a business already. All income from sources within the United States connected with the conduct of that trade or business is effectively connected income. So you have now a trade or business in the U.S. You have a business in the U.S. You have effectively connected income because you're selling products into the U.S. market, whether they were sourced here or in China or anywhere else. So we've established three different things. You are selling through Amazon in the U.S., that's a business. You're selling through Amazon in the U.S., that's a United States business. And selling through FBA in the U.S. is ECI, or effectively connected income. Okay, now that we've established those facts, we need to look at whether you will actually owe tax or not. And the bottom line is, without any exceptions, you would owe tax on your business profits in the US. So you would have to file federal income tax forms and pay federal income tax to the IRS. But this is where tax treaties come into play. So if you live in a country with a tax treaty, you may be exempt from federal income tax completely if you don't have a physical presence or a permanent establishment here in the US. So a permanent establishment is essentially like an office or a warehouse or some kind of location that you're using to sell and you control. But if you don't have a permanent establishment here, the way most treaties that I've read have been written, it says that business profits are exempt if you do not have a permanent establishment. And I haven't worked with any Amazon sellers that are non-residents that have a permanent establishment. And if you're just selling through FBA, that is not a permanent establishment because you do not control FBA. So if you are in a treaty country, and you can find the list of treaties on irs.gov, then you are potentially exempt from paying any tax on your business profits. If you're in a non-treaty country, the news is not so good, but it's not horrible, because in the US there's graduated tax rates and you would only pay tax on your business profits. So whether or not you're going to pay tax on that income in your country, whether you live in a treaty country or not, is really a discussion that you have to have with the accountant in your country. So your local accountant's going to tell you, if you're tax exempt through treaty here on your business profits, would you then need to pay tax on the business profits in the country that you live in, the United Kingdom, for example? And I believe the answer would be yes, because you're not paying tax here, and the point of the treaty is to avoid the double taxation. For non-treaty countries, there is no double taxation treaty. So whether you pay tax in that country or not, I'm not clear on. You'd have to check with your local accountant. Every country is different. But I think it's possible that you would pay tax here, and you would also have to pay tax in the country that you live in. So now let's look at entity formation. So what type of entity should you form to do business in the US? So most of what I see is that a seller in the US that is a non-resident would form an LLC. And an LLC can be formed in any state, but typically what we see is that an LLC formed by a non-resident would be formed in Wyoming or Delaware. Some people like the prestige of Delaware, but Delaware is more expensive. My recommendation would just be to form in Wyoming. It's cheaper, and there's no reason to form in a state that has higher fees. So you form the LLC here, you get an EIN from the IRS, and once you get the EIN and you have your LLC formed, then you apply for a bank account in the name of the LLC with your EIN and your company articles of incorporation. And I would recommend opening a bank account through Mercury. Mercury is very convenient, and they have no problem opening accounts for non-resident sellers, and it can be done all online. And actually there's a link to Mercury through the partnership I have with them on my blog, as well as LegalZoom if you need a option to form your LLC. And I'll put links to those in the description as well, or you can check out my blog at sellercpa.com. So most sellers form the LLC. You'll do that, and it's going to be the best option for you to be exempt from tax. Now, U.S. corporations is another option. You can't form an S corporation because you can't have non-resident shareholders. So an S corporation is not an option. So a C corporation or a regular corporation is another option. The problem with that is you would pay tax at the entity level. So whatever the corporate tax rate is at the time is the tax rate you would pay. So if it's like 21% now, you'd pay 21%. That might make sense if you live in a country where the tax rate is higher and you'd rather just pay tax here and not pay tax there. And you could be exempt from paying tax there if you pay tax here on the double taxation, based on the double taxation clause of the treaty. And then one other thing that you should note is if you form a C corporation and you distribute funds in the form of dividends, or you pay salaries, that income might then be exempt from tax here, but then taxable in your country. So when you take the 21% corporate tax plus however that other income based on whatever dividends and salaries you take out of the company, however much that's taxed, it could ultimately be worse off for you. The bottom line is I just don't see a lot of sellers forming corporations. Most use LLCs. And in non-treaty countries, it's pretty much the same two options. If you form an LLC here, you're going to pay tax, but it's based on the graduated rates. And you can also form a corporation here, which might make sense depending on the tax rates in your country. And the last topic that I want to cover is what forms do you need to file? So if you are a U.S. single member LLC, so you've formed an LLC in the U.S., you need to file Form 5472 by April 15th. So 5472 is just an information form that shows what money was put in or taken out of the LLC by you, the foreign individual, during the calendar year. So for any calendar year that you have money transferred in or out, there isn't any threshold. It doesn't matter if it's $100 or $100,000. You have to file this information form with the IRS, and for whatever reason, they have a very steep penalty for not filing, which is $25,000. And I've actually seen a seller that, not because of my problem, but because I inherited this seller from a prior year, the CPA didn't file this form for them, and they did get a $25,000 penalty in a letter. Hopefully, they're going to get that waived, but it's not clear yet. If there was no money transferred in and out of the LLC, then the Form 5472 is not necessary. And then any year following a year that you had income from Amazon, you have to file Form 1040NR. 1040NR is the non-resident tax return, and that's where you would claim your tax treaty exemption. So you file the Form 1040NR, report the taxable income that you did have from Amazon, and report the tax treaty exemption. And you will need an ITIN, an individual taxpayer ID number, which is different than an EIN. You'll need that to file the Form 1040NR. If you're a multi-member LLC, you're going to need to file Form 1065 by March 15th. So multi-member LLCs don't file a 1040NR. They file a Form 1065 by March 15th, which is the partnership tax return, and each member gets a K1 reporting their share of the income or loss from the business. And you don't have to file Form 5472 because that's all the information the IRS wants about the money transfers is going to be included in that return. Each one of the shareholders will need an ITIN though, because you'll need to file your individual 1040NR to report your tax treaty exemption. And if you are a U.S. corporation, you'll need to file an 1120, which is the corporate tax return, by April 15th, and your Form 5472 can be filed as part of that. So that's for treaty countries. Now, if you're in a non-treaty country, you're a single member LLC, you'll also file the same forms 5472 for money transfers in and out of the LLC. You'll file Form 1040NR, but instead of filing for a tax treaty exemption, you're going to be filling out Schedule C, which is going to be reporting your share of your business profits for that year, and that's what's going to determine your tax. The good thing is you will be exempt from self-employment tax, which covers Social Security and Medicare, since you're not eligible for those programs. They are problems, but since you're not eligible for those programs, then you wouldn't be subject to those taxes. You will also need an EIN in order to file that form. And then again, for multi-member LLCs, the Form 1065, and each partner gets a K1, and you don't need to file Form 5472. And then each member would file their own 1040 NR to report their share of the taxable income that was realized by the partnership. And lastly, U.S. corporations would file Form 1120 again by April 15th. And then a few other topics that I wanted to cover before I end this video. They're not directly related, but since I always get a lot of questions about these, and I think a lot of sellers mix up sales tax and state income taxes and state filing fees and all those other things, they just throw it into this big tax bucket. I wanted to cover those briefly. So sales tax, all the things that we discussed previous to this were income tax related. It has nothing to do with sales tax. Sales tax is a tax on the products that are sold to the customer. So if you sell a product to a customer on Amazon, they pay sales tax. Amazon will collect it and remit it to the state that that person lives in for you. So you don't have to worry about it. If you're only selling on Amazon, you don't need to worry about sales tax at all because Amazon handles that for you. So that's a good thing. Sales tax is handled. Don't worry about it. Now, state income taxes are a different thing. I really wouldn't worry about this unless you're doing more than $10 million a year in sales, because at that level, you'd probably have potentially more than $50,000 in inventory stored in FBA warehouses in any one state during the year. And at that level, it may expose you, meaning it'll create nexus to you having to file a state income tax return. So if you are selling at that level, that is something that you need somebody to analyze your nexus for so that you can see if you have exposure to certain states, triggering a state income tax filing return. And then lastly, for state filing fees, when you register as an LLC in Wyoming or any other state, you're going to need to pay annual fees to keep the LLC active. Generally, it's a very simple information form that's filed annually just to update your information, just to confirm that the members are the same, that their address is the same, and that kind of stuff. And it's something that you can generally do very easily by yourself. So those are the three other things that I wanted to cover in this video. Now, I think that pretty much covers everything. If you have any questions, I'll put the link to the blog that I wrote on this, so you can always reference it on my website, and you can go back and read in detail. And if you have any questions, feel free to stop by my website. I have a lot of other informative articles that might cover this topic and other topics. And if you'd like to become a client and have us file your non-resident alien tax forms, just go ahead to sellercpa.com and make an appointment and do a new client intro call, and we'll be happy to talk to you about getting the forms filed for you.